the representing the ownership. And this capital is, let's say, a promise to everybody who is a stockholder that they will pay back the money at a certain time. Yeah. So that was part of what you said. It is part of the overall equipment of a company. Yeah. And the liability capital is everything which is responsible. That means if you have, for example, a bank, they must protect themselves against losses, etc. And that is a capital, always something which comes from the owner. It is the basic layer of a corporate. Yeah? And this is the first money the lender, etc., is going to if the company is struggling. Yeah. Yeah. And it's like a startup that is what you go into your own money. Yeah. As a bootstrapping financed by yourself. And this is the capital and the liability capital, which is relevant. And if you have, for example, the banking industry, who has a certain insight or information about the banking industry? Does somebody know about the mechanism in the financial industry? Xiao? Xiao?
Yes.
Xiao, are you there?
Yes, I'm here.
Ah, super. Do you know something about the banking environment, financial system?
I don't know.
Okay. So who has some knowledge of banks, etc.? Okay. But me. That's enough. Look, in certain from certain authorities, etc., banks are asked to have more or provide themselves with more and more liability capital to actually protect their customer when the bank goes bankrupt. So that means they have to hire their part in capital liability. So that means they have to bring in more stockholders to invest in the bank and create this capital liability against the borrowed money, etc. So it is part of a very solid company. As much capital liability capital you have, as more solid you are seen in the economy. Yeah. So that is part of a value. If you go to the stock exchange or you analyze companies, you go and see how many liability capital a company has. That means it's solid, more solid than probably others. But in strong markets, fast-growing markets, it could happen that the liability capital is less and it's under average. For example, with startups, etc. If you go into the startup business, you will see that most of those companies have a very low part of their capital in capital liabilities. And most of this is a loan or a bond, means investors' monies, debts, for example, where they get interest rates. So that is quite the sense of the capital liability. Ray, you wrote, I remember in political economics, land just nature resource. Yes, but not in the way of definition what a capital resource is. Yeah? Of course, is it a natural resource? But that doesn't mean that it is a capital resource. Yeah? Liability, financial liabilities plus total liabilities. Yes. Yeah.
That's my understanding.
Yeah. But the major part is, of course, we talk about financial liabilities. Yeah. So capital, we talk about capital, the basic capital. Yeah. We will see this probably in a chart, in the chart I have. Okay, good. Then thank you very much. That was okay. Let me open up my slides. I know that you're always waiting for slides. They make life easy. Okay, first I have to fight against the technical stuff. Build, slides. So here we are. You see the slides?
Yes.
Yes.
Very good. Okay. Let's right away go into capital resource. Capital resources include things like office buildings, manufacturing facilities, every kind of it. And if when capital resources increase because it's that activity output should be increased. That means a higher level of employment and an over-employment in economic system. That means, okay, what is what did Marx say? What is the opposite of capital? It's most the working people, the laborers. Included, let's say included, that capital resources better the human and man and the laborers. If you buy into your company a very high sophisticated or modern resource like the level 5 internet providing Stralala, then you better the environment to make man more productive. So a capital resource is not only a resource, it is also, of course, a part of to better your working environment for your laborers and make them more efficient. Yeah. So if you have a resource which old, you have to think about to actually invest into it and make the environment productive. So that's a consequence of work. Now we have a lady who tells us what so let me check. There's a young lady. She is from, what is this here? Why doesn't this work? So, check. There's a young lady and she is now giving us, she's a bit funny, I think. She's good. She gives us a little overview.
And services. Money serves as a lubricant for the.
Sorry, we cannot see the video.
Yeah. Isin, not so fast. I'm slow.
I'm always too fast.
Yes, I can imagine. So, why is this not copying? My goodness. Horrible stuff. Okay. Let me check here. Capital. So, where is this lady? I think here we have her. Okay. I got her.
看了个寂寞。
Just a second. I have to. Yeah. So here we are. This is a young lady. She is now telling us in a simple way what is a capital resource.
terrible, I need to invest in a new pencil sharpener. Because if my job depends on this pencil sharpener being awesome, then I need to have the best that I can have, okay? Let's say I run a hole punching business. At my business. Exactly right. So it's important that you have the best capital resources you can have. Let's talk about the company okay? That's their primary goal is to make shoes. They have other things. But let's say that a new type of shoe machine was created. Machines. And they were producing like 10 pairs of shoes every 10 minutes. Alright? This new machine comes out and you can produce 50 pairs of shoes every 10 minutes. What's going to happen if Nike doesn't upgrade their machines?
Factories, and technology, you're correct. Capital resources are the things that you need to run a business. So if you're an entrepreneur, you need to worry about
Our capital resources.
because if my job depends on this pencil sharpener being awesome, then I need to have the best that I can have, okay? Let's say I run a hole punching business, okay? And I have a terrible hole puncher. Are people gonna come to have their papers hole punched at my business? No, exactly right, okay? So it's important that you have the best capital resources you can have. Let's talk about a company like Nike, okay? Nike makes shoes. That's their primary goal, is to make shoes. They have other things. But let's say that a new type of shoe machine was created. And Nike had the old machines. And they were producing like 10 pairs of shoes every 10 minutes, all right? This new machine comes in minutes. Upgrade their machine.
So they don't get left behind.
All right, they're going to fall behind. That's what we need to invest in our capital resources. We need to upgrade our capital resources. Your smart boards that you have in a lot of your classes at McClure, those are awesome, okay? But that's a capital resource for your teachers, for your school district. Those are capital resources for your teachers, for your
So come back.
School district. Those are capital resources. Money had to go into that. They had to invest money into capital resources for the school. And now think of all the amazing things we can do on the smart board that we...
So it's very easy, isn't it? It's easy. Yeah. The major outcome is always the same. If you don't invest, you problem. So that capital resource means against competitors. So that means if you are in a position to start a business, capital resource is beside the liability capital, one of the most important part of the business, and of course labors. But we come back to this. Okay, capital liability. I think we talked enough about this. Let me go back to the general overview of what financial planning is, and this is part of the content of our lesson. I don't know really why, but it is. And I want to just have to close the window. So, but I want to actually make this light. Yeah. So actually, I want to give you the overview, which you should, of course, have intensively be in your financial management, right? I mean, all of this you should know. Oh, sorry, I forgot something. We talked about customer lifetime value. You remember?
Yeah.
Yeah? Loyalty, customer loyalty, all these nice things. And we talked about this graph, right? Yeah? Okay. Acquisition phase, get a customer on board. Retention phase, make him buying more than once our product. That is the historical customer value. And then we come into the predictive environment. What is this guy or these guys buying in the future? And this part of it, we try to solve this question going into the future of a customer relationship and try to find out what do we actually earn and the revenue with our customers in the future. Yeah? It's important because you have to know this will be a profit business. And if you calculate what this is, for example, is the output of this example, you see, oops, I do a minus over a 3-year period means a consequence on the capital resource you put into this business. So how is this structured? These 1,000, what is this €1,000 mean?
Wow.
What does this €1,000 mean?
點解皮總快答啦你？
Sorry?
點解
What?
下次 ？No, nothing.
No. Okay. Minus. That means it's not a win. It's not a loss. It is an investment. And that is meant by acquisition cost. That is here. Yeah, to acquire customers. That is an acquisition cost. So this formula here can represent 1 customer, can represent 10 customer, can represent a group of customers. That doesn't really matter. The logic is always the same. So that is your investment, €1,000 or renminbi. Yeah, this is what you invest. You look into the future. Here we see we have 3 periods. We look into the future. So that means 3 periods. We try to predict our revenue or profit. Yeah, so T is 3. A period, it depends on your view of the market. So it could be a year. So we talk about this here. The view period looking at. Another important of formula is the margin. This is the product of a product we sell. The function is I invest €1,000 for salespeople, advertising, whatever you do to acquire the customer. Internet, websites, whatever. With these customers, you think, based on historical data, etc., you can make €100 profit. Let's say you have a product which costs €500, or you have whatever, you have €100 profit. These €5 are your customer care costs. Yeah? For example, a telephone line where customers can call you and when they have a problem, etc. Or you send them a present every year. You send them pencils from Montblanc or whatever you do. You have profit minus the customer care. And this is a very interesting figure. The retention rate. Who knows what a retention rate is? Xiao, are you with us? Hello, Xiao? Can you hear me? Xiao? 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 Hello? Xiao? No way. No. Okay. Probably she does some homework. Okay, Xiao. This is the retention rate, and look to this graph. Here we have the retention rate. We we acquire to buy a product converts into a customer, and the retention rate is rate which tells us that the customer or how many customers are buying again and again and again. So we have a retention rate from 75%. That means out of 4 customers, 3 buying a product more than once, more than one time. Of course, that means this is a very important figure, retention rate. The higher retention rate is, more profit you generate from one customer. Yeah? Okay. Ray? Okay, so retention, and then you have kind of an interest discount factor, which they say that is something when you go, what what we talk about future revenue calculated back to the today value. So out of this calculation, this number, €843.78, that means within the next 3 years, of this calculation, which whatever amount of customer, probably was one customer, we do a loss of 843.78 euro. Looking at it today, this is not a future number. This is a number which tells us that is the net present value. That is this calculation here from today. It's the today's number. So we know today that will be the result during the next 3 periods with our customer relation. So if you are the guy who has to make business in the next 3 periods with these people, and you see the number, what are your actions or your probably your solution for doing this business, your alternatives to deal with your customers to make a plus? What could you imagine to do against having this minus result? What would you do? What could you change? What you could do, I mean, you have certain parts of this calculation you could change in a way that you say, I have to lower the acquisition costs. Let's say I organize myself in a way that as a company, I only generate 700 euro instead of 1,000 euro acquisition costs. So you low down your efforts, you do less advertising, whatever, to minor the cost. The other thing is to higher the profit margin. You say, okay, I have to change my business model. I have to probably higher the price for the product, or to lower the costs, like here, to lower the acquisition cost. And I have to higher the profit, let's say, instead of 100 to 120.
Sorry, but in my memory, the profit margin, it is a certain numbers for the company. You cannot just get higher you cannot just get more products or get the price higher. It is a certain price. It is a certain number. If you are too high, if you higher than certain number, the profit margin will be lower. Is it?
Yes, that is exactly what you have to consider if you go into this here. This here is a part of your market research. These numbers are a part of your market research. These are part of your company structure. So that is the final consideration or the final view of your company. Of course, if you hire the margin, you have to change something in your company. Yeah, you reorganize certain parts of the company. You have to change something. If you lower the acquisition costs, you have to change something in your company. Probably you have too many people in your marketing department. The cost for advertising all of this is probably too high. You have to deal with your providers to lower the cost in this acquisition phase. Or you see that your salespeople are too expensive, depending on the business you are. So you have to look at all these factors and try to look into your company economically and have to find out what can I actually influence in my company. If this is not able, if you see as a company, I cannot change those figures because my company is not ready for it. It is not we are not able to change, to reorganize, then you probably, and this could be based on a product, certain product, then you probably say, no, with this cost approach and revenue and profit approach, we don't launch this product because what we think is we will make a loss. And then you have to decide, do I go into the risk and ignore this number and go for it with the product into a certain customer segment? But this is your tool. You try to find out, to predict this here. Yeah, this is something to, it's a bit try and error. It is not easy. And this is not, of course, there are more complex structures, and formulas. You can put in a lot of factors into this. Yeah, but definitely this is something to give you an overview about what you have to face. Yeah. So just to give you some insights, what we didn't have or what I didn't present you last time. Yeah. Okay. Did you have a chance to look into this Pricewaterhouse document?
Yes.
Yes? Who did? Yes or no?
We can download it.
Yeah, you can download this or look into see it in the internet. No, it's quite interesting. Just to remind you, it's good to have a look into. It's very easy to read. It's not that much text. It's more there are more graphs in it to actually look into the marketing, etc. approach and the customer experience approach. What we just talked about in our little marketing X course. Okay, financial planning. Go back to this part of our section 2 content of our lessons. Strategic planning. Here we are. Financial management means not only management the company's finances, but managing them with the intention to succeed. That is to attain the company's goals and objective to maximize shareholder value. Yeah, of course. And we have, of course, a strategic dimension And we have, of course, a tactical dimension of the planning. That is, I think, Aysen, you mentioned this. Yeah. So you have to have a short-term view and a long-term view. Yeah.
Yes, that's right.
For example, to get, and there we are again, to get more liability capital on board. It's also part of the financial planning. Of course, you have to talk to your stakeholder, to your shareholders, and tell, hey, would you buy more shares from my company when I offer those to hire my liability capital? You cannot do this from one day to the other. It's part of your long-term view on your capital needs. For example, if you want to take over another company, or you go into a new market, like a German company goes into the Chinese market, they need an enormous amount of money, and then they ask the shareholders about giving us more money or buying more stocks. However, before a company can manage itself strategically, it first needs to define its objectives. That is always the case. And that means define objectives is everything you do in your company, you should have a plan. That means a business plan. If you do anything new department, new market, new product, you do a business plan. Yeah. So you look into your business, and of everything you can do a business plan. It depends what kind of investments or revenues you are looking in. Yeah. If you open up a restaurant in your company for people, then you do a little business plan. Identify and quantify its available and potential resources. Here we are. And devise a specific plan to use its financial and other capital resources. Okay. So, strategic is about creating profit for the business and ensuring an acceptable return on investment. What is a return on investment? What?
The Chinese is the 投资回报率. It is you put the money in and how many % you receive.
Yeah, it's like you buy a stock of a company like Huawei. You buy a stock of this company, and your rate of return on investment is the dividend. What comes out if you invest something? And that return is, for example, a dividend of a bond or a dividend of a stock. So that means everything you do, of course, is or should ensure you a certain rate of return on investment. It's like the same when you study like you do now. it's an investment. So that means it makes sense to have a job later on to get your return on your study. Yeah.
And then I become a YouTuber.
Yeah, it doesn't matter. Or you become a singer or whatever, and you had sunk cost because you didn't need to study for it. But there are so many pieces in this world. Strategic management focuses on long-term success. And tactical relates to short-term positioning. Positioning, a position is always something you take, or you go to position yourself in a certain environment. That means this is of course more operational. Yeah. For example, in a company I was working, every 2 years we had a kind of a company meeting, which was not a meeting of all the employees, but everywhere at certain locations, etc. We had company meetings for 2 days, which was a kind of how are we positioned today? And not only positioned in the way of who is doing what, where, why, and needs how much money. Also ask our employees what is right and what is wrong. What are your problems with us, with the company, etc. And I very good remember that we had certain problems that a lot of people were complaining about the chairs and some about the tables, which were not able to adjust, that you can stand on at the table like a pult. So, and we had really a lot of stuff. So if you do something like this, you should react. Otherwise, you shouldn't ask people. Yeah? So that means 5 days later, a truck was coming and and we did give everybody a new chair. So this is a tactical management, a tactical financial action. We didn't plan this. But very important is if you ask people if they have a problem, etc., act. Otherwise, you have a problem with their motivation, etc. So within a week, they had new chairs. And the chair is about 500 to 700 euro. It's not easy money. Okay, good. Financial capital, here we are. Means anything can be used for productive purposes. Of course, financials are also meaning productive purposes, but from another point of view than capital resources. You have a debt. As a startup, you have a certain environment or a certain kind of capital. What is the speciality of capital in a startup environment? Startups work with debt and equity. often with banks. You know that banks are not willing to invest into early businesses. Overdraft agreements, I wouldn't say this is good for a starting business. Overdraft means you have an account and your bank let you go into a minus in your account. Yeah. You have personal loans. This personal loan can be a part of a bootstrapping activity in the very beginning. We actually already learned that bootstrapping are actually done in different kinds. Bootstrapping or part of venture capital or business angel money is either giving as an equity. That means then it is part of the capital liability, and it is mostly connected with an ownership of this business, like a stock. Or you get a bootstrapping money, which is not making the investor to an owner. It is only a loan. And he doesn't become an owner. He only becomes a debitor to actually give you money, and you have to pay it back. Yeah. Economic capital is the classic stuff. You have cash, you have real estate, commodities, equipments, and so forth. So from the economical side, you more or less talk, if you talk about financial capital, about debt, equity, and the other economical capital. And then, of course, separate, we talk about human and we talk about social capital. What is a human capital?
The people in the company, entrepreneurship, and the stockholder, I think, and employee.
Yes, human capital is more or less the employee, or the side of the labor, and that it is tangible is, to actually take in it, be able to grip and take it in your hand. It's difficult to measure human capital. It's as it tells you here, more or less, it is a piece of the skills and abilities. So if you look to a classical guy, a salesperson. A salesperson is very easy. You say, here, you get 80,000 euro per year, plus you get an extra bonus of 50,000 euro per year, depending on the customer's revenue with our company. So that is a kind of easy to generate, to quantify human capital in US dollar or whatever. A lot of laborers, it's a bit more difficult to measure their contribution to the company, etc. So that is tricky for a company. to measure the value and then to quantify this in US dollar. So in today's time where this internet stuff, data processing, everything which is part of this new world, artificial intelligence made programmers, project guys quite expensive. And nobody would have thought about it 10 years ago. So these guys with informatic or data competence are today's not best paid, but very good paid people. That can change within some years. For example, also very good and well-paid people are the CEOs. They have a look to all this capital resource, to the financial capital, etc., which becomes, of course, more and more important. Then we have social capital. Absolutely intangible. Nothing. Is it important?
The social capital, I think it is the level of the relationship among the peoples.
Is it important?
I think it is important to the human resource. Maybe it is important.
So the social capital is a kind of in Japan, people say, do you see this?
Mm-hmm.
So if you destroy this and it, no, it really is still there, and then will break and will be broken in 3 or 4 pieces. Yeah. The Japanese say, when you then fix it and you have these, and you see these pieces where it is fixed with whatever, with gold or silver, it makes this object more valuable than before. And that is a kind of social capital. Yeah.
It means the experience, social experience of the people or the company.
Yes, it gives everything, like Japanese say, everything more value. Yeah, because of your relationships, etc. Everybody benefits from this. Yeah, and therefore it's a very important game today, and that means, of course, go for a network to meet as much people as possible who can probably help you in the future here and there. And also, of course, within the business environment. That is a very important piece. So if you are later on in a job around, take care not only about your friends, also about your more or less business relationships. Yeah. And what is very important is change always your screen background. Ray, right?
Yeah.
Good. Okay, so any question? No?
Not yet.
Not yet. Good. Let me check here. Okay, let's have a break. Yeah?
Okay.
Let's say 20 minutes. Okay?
Okay.
Yeah,
Okay.
sounds great.
See you. Bye.
Right.